Hello, dear friends. I hope you're doing great. Before delving into the highly important topic of FTR, which we briefly touched upon in the previous video, today, before specifically discussing the intricacies of FTR structure, I'd like to provide a brief explanation about the philosophy behind fake support and resistance levels. Additionally, in completing the explanations on the RTM topic, I'd like to familiarize you with some tricks used by big boys. However, my aim isn't for you to identify support and resistance levels, fake outs, and zones, as these topics will be covered in subsequent sessions. Instead, my goal is to educate you on the philosophy behind the actions of big boys. So, without further ado, let's dive into the charts to provide further explanations. Well, friends, what you see here is a big picture of a fake support and resistance level that big boys use as a trick to achieve their price targets. But how do they do it? Let's say Bitcoin's price is in the $20,000 range and big boys aim to sell at $30,000. When the price is around $20,000, suppose we have a resistance range, which is essentially a sell order. Big boys, or smart money, if they intend to sell a large volume of their asset, need buyers to facilitate this. How do they manipulate and create buyers to reach their price target? For example, imagine Bitcoin is priced around $20,000 and big boys want to sell at $30,000. Assuming there's a resistance range around $27,000, which represents a sell order range. To break this resistance and reach the $30,000 target, big boys first need to break it. They begin by spending some money. Suppose in the $27,000 range, there are 1,000 Bitcoins available for sale, representing the resistance range. Big boys first need to buy these 1,000 Bitcoins. When these Bitcoins are bought, the price drops. This is what we call a fake out, which I'll explain in detail later. After buying these Bitcoins, the range is cleared. Now, how do they push the price upward and trap retail traders? After the fake out, big boys create a fake support and resistance level. They might create it in the form of a classic dynamic or static support and resistance level, or even in the form of classic patterns like triangles or wedges. Here, I've drawn a dynamic and static support and resistance level, or what we call a fake out zone, where the fake out is expected to occur. What is a fake out zone? Big boys create a fake support and resistance level and make multiple touches to show that it's a valid one. What happens next? Traders who follow the trend trade here and think this is a very strong support and resistance level, so they start buying. Also, traders who trade with breakouts, when the level breaks, start selling. All those who bought have stopped losses for selling, and those who sold have stopped losses for buying. After creating the fake support and resistance level, big boys sell all the purchased 1,000 Bitcoins at the stop losses, thus providing the liquidity needed to move the price in the opposite direction of breaking the fake support and resistance level. Big boys also spend some money to move the price in the direction of the first fake out. Here's where those who got stop losses from selling and those who bought and got stop losses from buying are, because breakout traders had a bearish perspective here, and those who wanted to trade with support and resistance had a bullish perspective. Liquidity is provided again and the price moves toward its price target. If we look at the Bitcoin chart, Bitcoin has faked out and created multiple ranges, faked out levels, created fake support and resistance levels, and moved the price toward the direction of the fake out. Well, now you understand how big boys smart money and banks move the price toward their target by creating fake support and resistance levels, breaking them, providing liquidity, and moving the price in the opposite direction of the fake out. But how do we recognize where the engulf is, where fake out is, where the fake support and resistance level is? These are puzzles that we'll learn to solve in the next sessions by identifying fake outs, fake out ranges, real support and resistance ranges, and ranges with real supply and demand and order clusters. I hope this video has been helpful for you.